Beth Kadoun, Vice President of Tax and Fiscal Policy. I want to give you an update on taxes. We now have the Senate tax bill, and so we have all three bodies in front of us. I'll give you an update on what the Senate did as well as how it compares with the other two. So the Senate does $176 million in tax relief. The House is at $107 million, and the governor actually has a tax increase in his proposal. Where they all three are the same is they all go to the federal adjusted gross income for our individual income tax instead of the current federal taxable income. So this means Minnesota will create its own standard deduction and personal exemption and brings us much more in line with most other states that use FAGI as their base. There's also major differences, but the one thing that they do all three have in common is Section 179, full expensing, full conformity for business expensing for our farmers and small businesses, so very positive in that, to see that in all three. The Senate also does an estate tax, moving Minnesota's threshold that's currently going to $3 million up to $5 million, so that's a positive. That's not carried in any, either the House or the governor's. This will be a tough road to get that in, though, because the governor's been very adamantly opposed to estate tax changes. The Senate also does a rate reduction. They do a rate reduction for the individual income tax on the bottom rate, which is currently 5.35%, brings that down to 5.1%. Minnesota has 4 tax rates. The House focuses on the second rate of 7.05%, bringing that down. The governor does not have any rate changes in his bill. We prefer the House approach that gives a bigger rate reduction for more income that would actually help benefit more pass-through companies as well. So we do like the House approach on that. What the Senate also does is they do a tax rate trigger. So this has been done in other states, which is if there's future budget surpluses, they would use that surplus to provide some rate reductions, and they would also do rate reductions on all 4 rates for the individual, as well as a corporate rate reduction. This has been done successfully in other states, and we think this would be a good provision to get in the final bill as well. The governor or the House do not have that provision. And then the other thing that they do is they also, on the international tax side, is where they do vary greatly, is the governor would tax basically all of the international tax provisions, even though there's real constitutional issues and policy challenges for Minnesota to do so. The House would tax a portion of the deemed, and the Senate does not tax any of that. So there's basically a lot of some similarities, but a lot of differences, as they will be entering conference committee in the final 2 weeks of session to see if they can get to final negotiations. What we'll be working on is to see if we can get the best provisions from each of those bills into the final package. The problem we do see is they frankly all take a portion of those federal tax conformity provisions on businesses that will be subjecting more business taxes in Minnesota, increasing those taxes. And they take some of those increases and shift it over to the individual side to provide rate reductions and other offsets. We'd like to see if we can mitigate more of those tax increases on our business taxpayers, and so that will be what we'll be working on.